Howdy, everybody. Welcome to Liberty Call. Today is Monday, December 16th, 2024. Hope you're having a fantastical day out there in the interwebs. I have been freezing in my office all day. Felt like just tired, and it's been chilly down here. Sun's out, but down here in the basement, I'm like halfway under the ground, so all the cold just sucks into my office. So anyways, hope you had a great weekend, and looks like the markets are kind of so to start out the week. We have the Fed meeting tomorrow and Wednesday, and then I'm sure there's other news we'll get into in just a second. But before we do, if you could do me a favor, give me some thumbs up, a like, a share, subscribe, a follow, and press the notification bell. All right, well, let's get into the markets for today. Let's see here. Dow Jones was down 0.21%, 92 points, closed at 43,735. S&P 500 up 0.37%, 22 points, closed at 6073. Nasdaq up 1.24%, 247 points, closed at 2173. And again, it's a very typical day of what we've been seeing here the last, 6 months or so. The Dow is in the red, the Nasdaq is way in the green, and the S&P 500 is kind of that middle porridge for Goldilocks, just right in the middle. So again, holding true to form. All right, VIX was up 5.07% today. It's at 1451. Canada down 0.5%, Brazil down 0.86%, and Mexico down 1.58%. Over in Europe, Germany was down 0.45%, the UK down 0.46%, France down 0.71%, the Netherlands down 0.23%, Spain up 0.23%, Italy down 0.43%. Switzerland down 0.05 and Portugal up 0.14. Russian exchanges both red today. The MOEX down 2.6, RTSI down 2.11. And the overnights, the Nikkei in Japan was down 0.07%, Australia down 0.56, New Zealand down 0.29. In China, the Shanghai was down 0.16, Shenzhen Component down 1.3, China A50 down 0.03, DJ Shanghai down 0.47, Hang Seng down 0.88, and the Taiwan weighted up 0.08. All right, so those are the markets for today. Let's see here. All right, well, let's get to the weekly economic update and jam through that real quick. Stocks finished the week mixed, bookending losses around midweek gains as investors digested fresh inflation data. The S&P 500 index slipped 0.64%, while the Nasdaq ticked up 0.34%. Dow Jones Industrial Average dropped to 1.82%, and overseas markets slid 1.48%. An up and down week. Stocks fell broadly over the first part of the week. Leading chip makers who produce semiconductors for artificial intelligence applications were under pressure after Chinese regulators announced an anti-monopoly investigation. Investors breathed a sigh of relief Wednesday morning following news that consumer inflation in November was in line with expectations. Mega cap tech stocks led the rally, with Nasdaq closing above 20,000 for the first time. Meanwhile, the Dow fell as healthcare stocks came under pressure. Stocks remained in the trading range for the rest of the week on mild concerns about Thursday's warmer than expected wholesale inflation report and the spending slowdown among lower income consumers. The Dow registered its worst losing streak since 2020. And as of today, I think it's down 8 straight sessions in a row. All right, final Fed meeting of the year. The consumer price index ticked up to 2.7% on an annualized basis in November, as expected. The markets rally following the news reflected investor relief that inflation met expectations and that the increase from the prior month was slight. These two factors may reinforce the belief that the Fed would follow through with the December rate adjustment, which it penciled in back in September. The bellwether inflation measure was the last critical data point before the Fed's two-day meeting scheduled to end on Wednesday, December 18th. Economic data this week. Tuesday, we have the FOMC meeting. It begins retail sales and industrial production and business inventories. Wednesday is housing starts and permits, the FOMC announcement and Fed chair press conference. Thursday is gross domestic product, existing home sales, and weekly jobless claims. Friday is personal income and outlays and consumer sentiment. Companies reporting earnings this week. Wednesday is Micron, and Thursday is Nike, Cintas, FedEx, and Paychex. All right, and there's the weekly update, folks. All righty, well, let's jump into the market recap for today and see what happened. Nasdaq hit record high on Tesla-led charge in tech. Fed meeting is eyed. The Nasdaq reached a new record high on Monday, driven by Tesla's strong performance as investors focused on the Federal Reserve's upcoming policy meeting and key economic developments. The Federal Reserve is expected to implement a 25 basis point cut at the conclusion of its two-day meeting on Wednesday. completing a total reduction of 100 basis points for 2024. However, market attention is centered on the Fed's guidance for 2025, particularly given concerns over sticky inflation and a resilient labor market. Analysts predict the Fed may signal a slower pace of rate cuts in the coming year, according to the CME's FedWatch tool. Traders are pricing in a 79.7% chance that rates will remain unchanged in January. Investors are also eyeing preliminary S&P PMI data for further insights into the economy's strength. Notable market movers, Tesla stock hit a fresh record high, contributing significantly to the Nasdaq's rally. MicroStrategy shares climbed over 6% following the announcement of its inclusion in the Nasdaq 100. Ford Motor Company shares dropped more than 3% as Jefferies downgraded the stock to underperform, citing concerns over inventory levels. Capri Holdings the company saw a 6% rise after reports surfaced that it was exploring the sale of its Versace and Jimmy Choo brands. And lastly, Honeywell International shares rose over 3% amid reports of a potential spinoff in its aerospace division influenced by activist investor pressure. With the Fed's decision and broader economic signals in focus, the market remains poised for further developments later in the week. All right, so that's that. Got an article here from Zero Hedge on food prices. Global food prices are entering a very dangerous territory. This was written by Michael Snyder via the Economic Collapse blog. All right, let's see what he had to say. Global food prices are escalating due to a perfect storm of factors, including extreme weather, rising demand, and disrupted production, exacerbating the affordability crisis for millions. The UN's Food and Agriculture Organization, FAO, recently reported a 5.7% increase in global food prices, the highest in 19 months. Key contributors to the surge include a 7.5% rise in vegetable oil prices, driven by excessive rainfall in Southeast Asia, and a sharp increase in coffee, orange juice, and beef prices. Key drivers: coffee. Prices of Arabica beans have surged by 80% in 2024 due to severe weather in Brazil and Vietnam, the world's largest producers, and growing global demand. Robusta beans prices also hit record highs. Orange juice prices have skyrocketed 327% over 3 years, fueled by hurricanes in Florida and prolonged drought in Brazil. Florida's orange harvest is projected to hit a near-century low. Eggs. Bird flu outbreak has severely constrained supply, driving prices above $4 per dozen in some areas, especially California. Beef. The U.S. cattle herd has shrunk to its smallest since 1961, despite the population nearly doubling, leading to soaring beef prices. Many Americans already struggling with high inflation are turning to cheaper, heavily processed foods laden with unhealthy fillers, further diminishing dietary quality. The outlook for next year: experts predict food prices will continue climbing as extreme weather patterns and supply chain disruptions persist, with affordability crises worsening. Social unrest may rise, and the financial strain on households will intensify. Without stabilizing food prices, global and domestic food insecurity will likely reach critical levels in the coming years. Buy a cow, have it eat and chew cud in your front yard. That'd be a good way to do it. All right, one last article from First Trust, Mr. Brian Westbury. This week's article is titled, "We Need a Peter Doocy at the Fed Presser." I think what he means is we need someone who's going to ask the tough questions. All right, the Federal Reserve's press briefings, attended by a select group of reporters, often focus narrowly on interest rate decisions, leaving important topics unexamined. This article outlines critical questions that deserve attention but are rarely asked, reflecting a lack of oversight and accountability for the Fed's decision and broader activities. The role of supercore inflation. 2 years ago, the Fed highlighted supercore inflation, a measure excluding goods, food, energy, and housing rents, to better gauge inflation trends. Initially, it showed less heat than overall inflation, but it now runs significantly above the Fed's 2% target, with CPI supercore up 4.3% over the past year. Despite this, the Fed no longer emphasizes supercore. Weird. Pressing questions remain. Why did the Fed shift its stance on this metric? And does its current trajectory suggest inflation remains unanchored? M2 money supply and inflation. The M2 money supply surged over 40% during the first 2 years of COVID, coinciding with the highest inflation in 4 decades. The M2 later contracted and inflation eased. This correlation raises questions about the Fed's decision to disregard M2 as a predictive tool for inflation. Could tracking M2 have better informed the Fed's policies, especially when inflation was mistakenly labeled as transitory? Remember that when Janet Yellen said that? Number 3, Fed spending and non-monetary research. Fed has incurred annual operating losses of about $100 billion in the past 2 fiscal years, funded by taxpayers via the Treasury. Despite this, regional Fed banks allocate resources to non-monetary issues like childcare, lead water pipes, topics outside their statutory focus on monetary policy and bank regulation. Questions arise about the appropriateness of this spending, whether it should exist, and the lack of external oversight. And last, larger oversight concerns. The Fed's balance sheet has expanded 7-fold since 2008 with little scrutiny from Congress, the White House, or the press. Greater accountability is needed to ensure that the Fed's activities align with its core mandate. So I think that's why he wants Peter Doocy at these Fed pressers, is that he thinks he'll ask the tough questions. I don't know about that, but anyways. All right. Well, that's everything I had to cover for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a buzz. I'd be happy to help. All right. Well, that's everything I had to cover for today. And like I said, go to the website if you need anything. Otherwise, have a great evening, and I'll talk to you next time. Adios.